How to purchase an existing business up to $5 million with great terms and interest rates plus 0% interest financing for 6 to 18 months in the form of business credit cards. You can liquidate the cash out of these cards and use them for any investment. Perhaps it's for the full purchase of a business, perhaps for a down payment, for other reasons I'll also be getting into in this video. Hi, this is Michael with Viral Funding Solutions. I'm a business loan broker expert, which is another way of saying that I know how to handle documentation correctly, go over it, analyze, evaluate it, and be able to then combine that with sharing you the best lenders and underwriters in this industry and for all types of services. I've vetted them very thoroughly. I've been doing this for a long time. I have my own businesses that I get funding for, multiple of them in the digital marketing agency space, affiliate marketing ones. I did a hybrid some time ago with an e-commerce setup, not so much these days, but other ventures. But this is my priority, my main purpose. And I've been doing this for a long time. I'm always in the market knowing what is in your best interest and what could work out for you without overpromising and under-delivering, without you feeling overwhelmed, without feeling pressured, without feeling like, hey, you didn't notice me, or hey, I'm this person. And I like to take care of the person, the human first, and then in their business. So enough of an introduction, and I'll leave information of this down below in the description. I may leave this document we're going to go through in just a second. I'll be showing you these different options that are available. You might know of some of them, but I'm going to look at reverse engineering. I like to think about the very top, and then we're going to work backwards with different products and services and get more creative in case the one at the top doesn't work out best for you. But let me know where you are tuning in from. We are streaming live. This is spontaneous, excuse me. And if you are not in here on the live, it's okay. I haven't broadcasted this out to many, but if you're watching it later, please give me a hashtag replay. So let's go through this document and check out some of these options. And what you should know first and foremost is that some of these are going to be more documentation heavy on the buyer, and then you have the seller. I'm going to go into some of those documents that'll be asked for specific services, but keep this in mind that I don't waste energy and time. I'm not one of those people who is going to be stringing along, be waiting too long on someone, unless it absolutely makes sense and you get caught up on other things. But don't start something that you can't end. I don't like people who talk about something, but they don't do it. And this isn't me sounding aggressive. I don't want to be negative. I don't want to be looked at that way. It's just giving you tough love and that kind of reminder and that hand on the shoulder saying, hey, I'm here for you no matter what. But at the same time, be respectful and accountable. Show up when you need to. Allow for feedback. Be open-minded, and please be patient. And again, let's go through this document and then we'll close up. So I put here, you have the SBA 7A option, and I put an X there, and we'll review in a little bit what the specific lender is. And there's different SBA 7A loan lenders that I have. So it just depends on your business. It depends on if you're buying a business. It depends on many other factors. And there's one in particular that I'm very fond of, and I've helped out a lot of business owners get funding through. And there have been others as well, just depends on the situation. But this is one that I would lead in with, and one that I know works extremely well, very reputable in what they do and multiple services, etc., and so forth. So best with the SBA 7A, documents and information needed are below and how I will ask for them. And before I go any further, this is an SBA 7A loan. This is the cream of the top. This is up to 10 years, amortized, up to 25 years included with real estate. And so it spreads out the terms, and the interest rates are right now prime, and I'll go into that in a little bit, 7.75. By the time you're watching this, perhaps it's up more or less, plus an additional 1 to 3 points, 2 to 5 points, depending on the type of loan you take. But these are exceptional. This is what everybody wants, and this is what you normally think about when you're getting an acquisition loan, is going through the SBA 7A program. We'll go through some of the details that I put together for you here in this document. So it'll say here, or it may look different in time, but keep scrolling down until you see the first hyperlink, and I'll have that. But you'd rather need the business you want to acquire to be at least 2+ years of recent profitability. And the reason we ask for that, and it's more on cash flow than anything, we're very strong on cash flow full doc. That's what you're going to see with a lot of SBA 7A loans, even on the different types of uses of funds. And I'll go into some of the documentation just so you're prepared to know what you're getting involved with. But this is looked at as stronger cash flow, the better. And I do a cash flow analysis myself with my team after we've acquired the whole debt schedule, taxes, profit and loss, balance sheets. And I'm looking at a lot of this information myself, and I know how to analyze it. And at the end of the day, we want to make sure it's a cash flowing business that can sustain the debt. If you're enduring financial hardships already in your business, and perhaps there's no refinance situation, or there's no other form or best way of consolidating, or we do consolidate, which you can, but we are over leveraging you instead and giving you another amount of debt on top of what you already have, it'll be most difficult to secure the loan, because a lot of business owners, they get themselves into situations where they're already eating up into their cash flow. So taking other debt off their plate, refinancing, consolidating is one piece of the equation, but adding another form of debt, that could strain their business, and we don't want them to go into defaults. We don't want them to go backward. So it's important that you know your own profitability, your own cash flow. And you're just not, when you acquire this business, or if you already have an existing business trying to buy a similar or a different business, we'll get into that in a moment, but you should know that at that point, that profitability, cash flow is very important, and managing that. And it's more than just looking at it from a month-to-month revenue and annual gross revenue. There's more to this part of the equation. And if you know, you know. But here, if not 2 recent years of profitability, that's what we ideally want. If not, I mean, we're looking at it on a cash flow basis, and we can look at a few other things. If not, we will evaluate the cash flow much stronger and have great historical tax returns. And that plays into profitability, but also looking at a few other things on that, aside from net profits, etc., any additions, not always just for relief purposes, and can't be used for real estate investments unless it's an SBA 7A commercial real estate we can work on. So residential real estate investments, those are more difficult to fund, really don't work with passive investments. I'm just giving you guys a brief overview, and I'll get into this in a little bit more. But if it's just for working capital and inventory, it can be more expensive, but you're looking for an acquisition, which is much better. And if you're doing ground up commercial real estate, I'll leave options for that down below in the description, guys. And if you're looking for using the SBA 7A for other reasons, for startup, I'll get into that in a moment, non-startups, and you have the qualifications for that, I'll leave that information down below, as well as other alternatives. This can take 4 to 8 or so weeks to fund. I've seen it push out a little bit. 4 weeks, a month minimum is when you have all the documentation ready. We're not going back and forth all the time, revisiting things. I had to ask for something. You didn't send it. This is the way I asked for it. You had doubtful questions. I'll clarify it. But by that point, we have 2 to 3 emails that go on, and it's per case situation. So you can even have all the documentation ready, and it still takes a little bit more time. But to have that odds increase in your favor, if it can take about a month, then make sure you have everything prepared. That as we ask for it, we ask for use of funds, projections, and assumptions. I'll go into some of that in a moment, but make sure you have everything ready. For non-startups, 2 years of recent profitability is best. And if not, we may be able to take a look as long as you have stronger cash flow. And if you're buying a business, this is a bit different. But historical tax returns, business credit established is ideal with 150,000 plus in annual gross revenue, but it's better to have a 200,000 plus, but 400,000 plus is what they would like to see to get somewhere between 200K to 5 million. Also, they usually require a 10% down payment of the total amount you are borrowing. That's similar to what we'll see on a down payment. Well, it contributes into a little bit more sometimes than 10%. Sometimes it can be 10 to 20%, just depending on the overall total cost, the addition of working capital, and I'll go into a few more examples in a moment. For startups or franchise startups, less than 12 months preferred. Documents and information needed are below. I won't go into this part of the sequence right now, but just know that this is for a different segment that's unrelated to purchasing a business. This will go into startup funding, and I'll try to leave this documentation down below. But let's move past this and let's focus on the acquisition part. So here are the 5 key questions I would ask, and we, myself, my team, the lender, the underwriters, would need to know for an acquisition of a business. So please email me back these. If I ask it in the email very politely, just please email me that. It makes everything much more fluid, efficient, energy and time saving. If there's a time for a phone call, it may make sense, it may not. It just depends on the part of the process, depends on many factors. And so I have a lot of things to do, and so I can't always attend to a phone call immediately. So just know that I'm there. I'm the person who's sending you these emails, and that it's coming from a reliable, loyal source, sir. But I know I didn't mean to say sir. So please email me back with these answers. So number 1 through 5. Number 1 being how much money will you need? Number 2, do you have any equitable collateral? If so, what and how much? 3, do you have liquidity? If so, how much? Number 4, can you provide at least a 10% down payment? Number 5, what relevant experience do you have to the business you are purchasing, if any? So these are the 5 questions. Normally, if not, there's an adjustment if I could have added profitability and a few more things. But this is what it comes to when you're looking at an SBA 7A loan. These are the questions that the lender more or less will know, so want to know. And there are other options out there if you don't qualify for this. So I'll show you those. So please stick with me. And they may not be as, well, you got to give me a detailed plan. You got to give me the projections and assumptions. They're not always going to ask those. So other ones that are probably more medium-ish, high-ish, like a bank term loan we're going to get into, they may ask for that a little bit more. But other ones like personal funding or business credit funding, I'm going to get into those in a moment. But those, they may not be as doc heavy and they may not be as question heavy on all of that. But let's revisit these. How much money will you need? That's the primary question. It's how much are you seeking? For what type of business would you like to acquire? I'm going to ask you more. Why are you looking to acquire this business? Do you understand the profitability, the cash flow projections, the current or the assumptions, as well as its current cash flow, the recent tax returns? These are things that are going to have to be gathered from a seller's perspective, and then a buyer. I'll show you a little bit more of that. But do you have equitable collateral? What, if any, kind of real estate do you have? What is formidable as an asset? We don't always take collateral as a primary source. Not every lender will, but they'll want to ask for what you have on your assets and liabilities. Will we have to put a home, a UCC lien? Will you have equipment, heavy equipment, real estate that helps actually with the overall total costs? That'll be very helpful, and a few other subjects if the seller's willing to do a few things. If so, and how much? What is that and how much? Number 3, do you have liquidity? How much cash do you have on hand? What can you pull out? Do you have anything in the bank's extra cash on hand that can be a source towards the down payment, working capital, anything additional on post-closing liquidity, remaining cash flow? So we know, or remaining cash, so we know you have enough to service the debt, so you're not being held on making all of these payments and then you can't make any more because you don't have any cash in the bank or elsewhere. And so there are many questions that we will ask. Number 4, can you provide at least a 10% down payment? Again, this can be adjusted depending on the overall total cost and a few more things, but at least a rule of thumb, having at least 10% down payment. And it's per case basis. We're going to look through documentation. We'll look at cash flow. We'll look at a few other things. Number 5, what relevant experience do you have to the business you are purchasing, if any? This is most important because you can be, let's say, working in the medical space. You could be a surgeon and you have a few practices and you're looking to buy another business that's in the same vertical, or it can be another type of medical business, but it's medical related and you have somewhat experience in operations management, product development, you have financial development, whatever area that's in. But more so, they want to know, will you be able to handle this business? Do you have the right team in place? Is there the right product market fit for what is going to be happening in the future? What is happening now? What could happen? They're preparing for. So cash flow projections, assumptions. So just knowing that you have the relevant experience, even as a 9-to-5 employee, but you've been working as a chiropractor for 30 years. Now it's time for you to expand and open up your own business. So how much experience do you have hands-on? What have you done with the team? What have you done all over the place there? Do you have any other relevant experience? Who will be guiding you? Who will be helping you? And so forth. So that's very important to know. It's not always the deciding factor, but it is one of them when we look at it. It's not just to say I have a 10% down payment, I have cash. And you can work in a horizontal field. You can say I have a restaurant, but I'm going to open up a manufacturing plant or something similar. But you could say, well, I have this amount of experience running this. I overshadowed, I interned, I saw all this stuff. And a lot of times it can and can't work. And other times you go, I just need, in addition to my restaurant, I got a manufacturing plant. We're going to produce more product. And that manufacturing facility is going to help pump out more product to our place where we're going to get it locally sourced. Product is going to be sent to our place. So it could be a lot of different things for different industries. You can get an SBA 7A loan with a minimum FICO credit score of normally 675 and above. Sometimes you see 650, 660. Even I've seen below that, but that's the exception. And for purchasing a business, ideally 680 and above. 675 is an entry, but shoot for 680. Best, it's 700 and above is what you want ideally to maximize the amount you can get, to maximize your cash flow, your terms. We look at credits to determine terms, rates, a lot of other things included. How much of an approval amount, how much cash do you have on hand, how much can you actually take on when you're buying this business? What is it currently doing? There's a lot of questions here. With my lender and I'm revealing here now, South End Capital is one that I recommend very strongly. Of course, like I said in the beginning, there are multiple SBA 7A loan lenders, one of them being South End Capital. And I'll leave more information down below. And if anything changes, you'll see it down below in the description. If there's anything I need to pivot on, you'll see so. You'll learn more about those. And so South End Capital is one that's very amazing. I'm helping out a lot of people get that right now. I'm also doing that, preparing more with others at the moment. And I've also gotten other people funded and so forth with a lot of different SBA loan lenders as well. But this is one of them that I recommend. So let me go back into this one. Best with the SBA 7A, up to $25K for the express loan, or from $200,000 to $5 million financing sizes for the standard SBA 7A. There's also like micro loans where they could be between 25 to about 350, 25,000 to 250. I'll try to leave more information on that, but that's not normally used to purchase a business. But those are much harder also to get approved for. You need to have 700 plus credit. It's much more stronger. Less of a cash flow concern, because at that point, if you're only getting a certain amount, less than 200,000, less than 350,000, you may not have so strong cash flow, but it is still a concern of ours. But this is the one to go with when you're purchasing an existing business. And again, like I said, if there's anything that changes, you guys will know about. And so here are the more of the details. You get to work with the top SBA, quote unquote, let me put here, preferred. That's what you want. You don't want to just go to the SBA side. And if I didn't say this already, it is instrumental for you guys not to go just to the SBA.gov and just search in, even if it's something locally. That's not always in your best interest. And what is best is for you to consult with me, whether that's on a call. It's usually on an email with me. I have a very strategic system, and Mamacita knows this. We've been going back and forth on things, and I still have yet to email back on a few things, and then as well with others. But I'm very systematic, process, and automation oriented. I enjoy getting to know people. And if it's hard for you to open up, I'm the same way. I'm an introvert. It's very difficult for me. Very, very hard to be on video right now. It's hard. But what I recommend is understanding where I'm coming from. And if I didn't say this and you didn't know my backstory, I won't get into it too much, but I was literally overpromised, under-delivered in a once 9-to-5 role in a financial logistics position. And the company got bought over and had to go back on employment benefits, and food stamps again. And I felt very embarrassed at that point, and I didn't want to go through all that. Just the thought of it again, it was in my younger 20s, and you live and you learn. I went to school academically, and I studied, got my degree, and then I worked in different jobs. I did manufacturing, construction. I worked in different industries. I got to see the ins and outs, not just in the financial part of it, but actually working machines, working in the field. And then later on doing more of a cubicle space setup, and then lifting stuff and helping HP and Peace Health as one of the biggest contracting companies for that. But like many of you, wanting to venture out, start my own business, and I got into a few other ventures, digital marketing agency, affiliate marketing, and a few other ones. So that's a quick brief interruption, and I will go into the comments. Appreciate you. Let me continue with this. Hang in there, and then I will get back to you, as well as anybody else. So you get to work with the top SBA preferred. This is what you guys need. Not, oh, I want to go search and do it on my own. This Michael guy didn't, so he told me I wasn't going to get approved for this. Enough of that. If you want the best, you've come to the best. And I'm not saying that to sound cocky. I'm very confident and certain in what I do, and I will be very transparent with you. But if you're sucking up my energy and time in ways that are not efficient, it's okay, but I'm going to correct course. And if you're not on that with me, well, you're sinking down, or you're either jumping on another ship, and who knows what you'll get on that one. So lender that is focused on you and delivering speed. With myself and my team, I'm actually speaking with a lot of them right now. And with my lender, I've been doing that back and forth today. Loan approvals may be issued in days. So upon receipt, a complete package and funding occurs within weeks. It could happen, not months. It's possible, but that is the outlier in this equation. So like I said earlier, it could take a little bit longer. Normally with you see SBA loans being 4 to 8 weeks, if not more. So that's 1 to 3 plus months out. So nationwide lending footprint, all 50 states plus DC, no population restrictions, and there are larger transactions from 1 million to 25 million. That's what the M in caps lock stands for. May also be considered via our SBA 504 and USDA programs. A lot of people inquire about the USDA, specifically those of you who are in the restaurant space, as it's catered to. And there's more, not just that, but we value personal attention. And when I say we, I mean myself and my team. First and foremost, you want somebody who has the right character. I'm very punctual and disciplined, and I'm somebody who knows their stuff, and I won't have my energy and time zapped. I'm not mean. I'm not aggressive. I'm actually very nice. I give people the benefit of the doubt. And I know when to get in and out of something. I know when to say less. I say less, I do more. That's what you should be doing. Say less, do more. But I'll ask questions and I listen more than anything. I'm not going to talk over you. I won't talk more than you. Maybe there are some times where it's appropriate to, but I prefer not to. I'm going to ask you questions to dig up some things that I need. And it's very common. And I want to know also about you. I want to know, hey, how are you? How are things going? How's your business? So before you even think about just sending an email, sometimes like, hey, Mike, I need 25,000. Hey, Mike, I need 50,000. I need 150,000. Hey, how about, hi, Michael, how are you? Thank you for showing that. And not all the time, but hey, that makes a difference, does it not? Character is most important. I'll get back to you guys in a moment on that as we end this video. We're going 21 minutes in. Please hang in there with me. I'll get into some of the documentation. I, myself, my team, I put my team before me. I put you guys before me. We value personal attention to detail, and it is the most important. We offer fast and efficient tech-enabled SBA financing as well with a human experience tailored specifically to you and each borrower. So it's going to be very streamlined, hassle-free, better underwriting, as opposed to just going to your own bank. Michael, why don't I just go to Chase? Why don't I go to Wells Fargo? Well, for one, they're already having people who are retiring from the underwriting department because of what happened with COVID. People are being let go of what's happened. The communication with the departments, it isn't as concrete. I've seen it, and more so with some than others. The underwriting guidelines, the credit committee, just takes too long. It's outdated. You don't know who you're getting. Do they understand your niche? Do they really understand the purpose of your funds, the sources of your funds? Do they understand how to gather documentation like myself and my team, send you an application, making sure you get everything taken care of correctly, handling it appropriately? It's not always a given. And so with all of these, and there's a lot more that can be complex where you don't get the amount that you want. The rates are somewhat similar. You're seeing the same bank rates on those specific ones you go to, as opposed to some other ones that could be online, traditional bank loans, etc. There's some that are already pretty much similar. But those are just some of the reasons. So over here, and I'll go to the comments. Appreciate you guys. Thank you for sticking with me. You guys are true warriors. I know who you guys are. I do. I know those of you who show up and those of you who complain. And when I give you guys a clear answer, you guys don't maybe like it. You don't have to like it, but that's what it is. People will come to me and I'll give you guys examples. I need money now. I have this set in place. And well, that won't work. You got to get it in at least a week or two, and you got to get it in 3, 4, 5 days. Well, we can't do revenue based, but that wouldn't work. And so it's like, you got to work with me here, guys, and don't get yourself in a pinch all the time. Find ways to make sure you're set up for success. So when you need the funding, you're not scrambling. Nationwide lending footprint, as I mentioned, what we value here, general documentation. So let's get into some of this stuff. Required for the purchase of a business are, you'll need an agreement to purchase the business. And this kind of stuff does change over the time. So I put this documentation together to just evaluate a few things. And this is just primarily what you'll see for the majority of them. But you'll need an agreement again to purchase that business. You'll need a letter of intent to buy the business. You'll have to supply business tax returns for the past 3 years. And I'll get into this buyer/seller component. You'll supply an outstanding business debt schedule. We can determine cash flow based on that. I look at balance sheets. I look at P&L statements. I look at more. You'll need long-term business contracts. That also shows us, okay, we're looking at doing something longer term. So we're evaluating cash flow on a longer term projection and assumptions. And those uses of funds and sources of funds, when we're asking for things like that, it has to be more specific. Like giving us top level surface information, it doesn't give us much. It's like, well, you're trying to get X amount of customers for this, but if you're looking to acquire a new building, well, we have to know the specific details of what that building entails. What would be the cost? What would be the payments to that additional amount to your business? So Don't give us a surface level view. Don't have me coming back to you like, hey, I get it. If you didn't get it the first time, it's fine. But the next time I come around and I say, hey, I need an extensive amount of information, please can you expand and elaborate on this? Boom, let's get it done. I should expect that the same day, if not the next day, or if it's in a couple of days, because this moves the process. And if you're going to wait, you're going to go cold. Don't do that. At least let me know you're not interested. Hey, Michael, I changed my mind. Okay, I'll work with you, but don't just go on your own. And don't just try to seek other funding if you are unsure about what you're getting involved with. I'll get into that in a moment. So here, you have to supply any outstanding debt, long-term contracts, have documentation of business assets and liabilities. We'll get into some of the forms and so forth, but there will be a business lease agreement that is needed. Incorporation documents and or business licenses are needed, or a business license determining on the business, determining on a few other things. We may ask for insurance policies, and we'd have to get one, but we can go a little bit further on this, and it may or may not be needed at that point. But business plan to ask for two-year projections and assumptions and more is commonly what is asked for on behalf of the buyer. The seller may already understand this, and they can help you understand from past history, past returns. And so it's most important that you guys leverage that relationship with the seller, because this can add in also a seller note, and I'll get into some examples here shortly, but they can finance more of the project need, and then you're paying them on a certain amount, but we'll get into that here in a bit. In addition to the above, the SBA will usually order an independent business appraisal to give lenders an idea of what the true value of the business is. This way, they are not overpaying as well. So if we're giving you a loan, we want to make sure the appraised value is justified. We don't want to go ahead and say, well, we're giving you a higher loan than the appraised value. If your appraised value, you thought you're getting a loan of about $1,500,000, but the appraised value comes back and it's around $900,000. How can we justify giving you $1,500,000? But at that point, you would have an understanding to say, well, okay, if it's appraised at that amount, I don't need to get that high of enough of a loan. Well, what would be my overall total costs? We look at more. We look at the down payment on that $900,000, 10% of that, and can you supply that amount? And then there are more costs included. So if you don't have that necessary down payment, again, stick with me. I'll show you other options, and I'll try to leave this document in the description down below. I would have left it in the comments, but let's not do that. I know it's a thing of let's follow along, but let's view the video, and then we can get into that. And if it's not there, I'll leave other information. Don't worry. I'll leave a questionnaire form for you to check out. I know people like to view these things, though. To complete your application package, you'll be required to submit SBA-specific forms and documents. The forms and documents commonly required in the application package include the SBA Form 1919 or 1919 for borrower information. I like to sometimes say it that way. And so let me go ahead and show you guys on screen here what that one is, and then we'll backspace to this document. But Form 9112 and then 413 for the statement of personal history and for the personal financial statements. So let me go ahead and open this up now. You see this on the window. And I won't go through the whole documentation. I've already have done this with a lot of individuals, but you can see from the top there the purpose of this form. We'll go into some of the headings of this document. But you see at the very top here, and I can always tell when the expiration date is. You see there, 9/20/2023. So some of these change on the expiration date, and that is of importance in many cases, because the past one isn't necessarily going to look much different, or it could have some changes, but we want what's most up to date. The definition, affiliation, close relative, eligibility, passive company, household member, operating company, short for OC. Now, here we have the SBA borrower information. This is where you would include applicant business legal name. You have operating business legal name, and you have more. And I'll go into separating the buyer and seller information on this. But you see here quite a few things to do. You're going to be checking off yes or no on these questions. Are there co-applicants? Has an applicant for the requested loan ever been submitted to the SBA, a lender, or certified development company in connection with an SBA program? And there's more. I won't spend all this time going through all this, and other questions that you'll want to answer. Sign-in date there in the areas provided. And then more questions. I know this is a longer in-depth form than a few of the other ones you may have seen or come across, but this is one of them. Make sure you read it from top to bottom and submit what we need, which is all of it. We don't want half a form like people when they send me documents of bank statements and that. I'm like, Well, you just sent a snapshot. I need the whole documentation. PDF preferred is what we're looking for. So send it in that format. So over here, now I have another one for the personal financial statement. Let me move that over. Here it is. I've been doing this a lot, like a lot of these being collected and distributing to others. When I mean is I do these, guys, I do these. Think about that. I'm not here just giving you information. Who else on this platform, who else on another location actually gives you this much in depth? And I actually, with a lot of services, go even deeper where others are like, hey, I'm an influencer. I hope they just click the link down below in the description and then go sign up for that program. Be careful about who you guys follow. Appreciate you guys. Thank you, Kamar. Thank you, Mamacita. I like going by that name. Gerardo, appreciate you. Thank you for joining us. I'll get back to you guys in a moment. Thank you guys. Please hang in there with me. I will answer things you guys have. This is very important for you guys to know. I don't want to interrupt for anybody else as well. But personal financial statement, simple, straightforward. What kind of loan are you getting? And some of the ones in the past haven't always asked it this way because strictly it's SBA 7A related, or another one, but you're going to check off that one. And this would be likely when you're submitting like a disaster business loan application, excluding sole proprietorships. So this is what you're seeing here. And we scroll down here, you're going to see the assets and liability section. I'm not going to go through every single one of them, but here it is. And this allows me to see more. So now let me do another form and we'll go back to where we were. Let me move this over. I can't see a few things. Might get dark for a second. Okay, I had to move my HP lighting over. Some things are in my way to read. Okay, this is the SBA Form 912. And what you're seeing here from left to right are a couple of columns. And I won't go through it all again, but name and address of the applicant. You're seeing a similar pattern to all of them. And this one is more or less smaller, somewhat to the personal financial statements. It's when you get into 1912 form and a few other ones. But this could vary depending on the submission package. And sometimes you'll see it change. Maybe it's less that you have to add, maybe less documents on this, maybe changes. But for the majority of the time, this is what you'll see. In most cases, if not, then I'll communicate to you what we would need on that page. Let me go back here, though. I have to backspace about 3 times. There it is. And let me scroll back here. Give me one moment of pause. And then the next line here, financial statements that include a balance sheet, profit and loss, and income projection. Very important. Regardless of what kind of use of funds for, a balance sheet. And then I verify the date on these balance sheets, the profit and loss, making sure it's even. And I can look at them too. I can look at the debt schedule with the balance sheet included, because if you tell me you have no debt or the business owner says there's no debt, and I look at the documents, and please be transparent, guys. I have people who maybe you just take out recent loans. It's okay. But we're going to need to see everything on it. It goes without me being said. Like, that's not something that I need to bring up. It's common sense. If there's more loans taken out recently, you submit something, just make sure you guys add that into it. I'm not bashing anybody or nothing like that. I'm not trying to sound aggressive, but that's not something that I need to ask for. It's just something that is common. I took out a loan. If I did, I took out 500,000 2 months ago. Oh, but I needed an additional, I need an additional 80,000 at least. So I just took out 80,000 at the end of February. Okay, well, I sent in something, but I need to update that. And if we're asking for it, okay, sometimes we need to let you know. It's okay, just as a reminder. But hey, I know this for a fact. Hey, I got 500,000 that I took out. Then I have 80,000. Will I refinance that 80,000? Am I looking to not refinance that? Am I looking to add this total towards the total of the SBA 7A? Would it be in the injection of the cash flow analysis? Would it not be? So these are things that I'm going to ask for that if you don't have them on there, make sure they are. So back here, guys, this isn't a joke either. So just so you guys know, you guys are like, oh, this guy's not just a marketing guy. He's not just the information guy. I review documentation. I send applications. I do all of it. And I'm not just this glorified affiliate, glorified referral partner, and then you just go do whatever you need to, and I'm not there. Some services are a little bit different in how the process is handled and what I prefer to do with them because of a proven track record they have. But I'm here. I'll be here to take care of you. Don't worry. You can send me a quick text message. We don't even have to talk about business. Hey, Michael, how's your family? Hey, how are things going? How is it up there in Washington? Cool. So here, I will probably note that you don't need to get these filled out right away. I'll sometimes don't even add this here, and I'll expect you to send them, or I'll have a different message. But here, let's get into buyer. So we'll do this right away. We can submit the digital app and how they'll ask for it. Sometimes it's a PDF and a digital, depending on where we go. Buyer versus seller documentation needed. I would like to show you what we'll need when it comes to the buyer and the seller. And this is not always an exclusive. Sometimes it expands. When you first submit something, we may ask for something else that comes up in the application process. So just be able to, hey, get on your feet. I'm not saying you got to be the most reactive person, but get ready to. If we're moving at speed, sometimes you got to be like, hey, I got that file. Hey, Michael, here you go. Boom. I didn't even have to tell you. Boom. Sent. Done. Simple. You got it out in 4 months. Great. But that's just the exception. And it can be very rare because some people, you got a lot of things going on. But at the same time, are you making excuses? So for the buyer, here's what will be needed. Personal financial statement. We saw the PFS form. PFS is for short, for personal financial statement. We saw that earlier. Standard for most loans. That'll be asked for. Common sense that we need to know assets and liabilities. We need to know the applicants, who are the guarantors, if anything, what's listed, what isn't listed. Ownership of the business, owning 20% more of the business, who are we listing? Be prepared to list all sources of income, assets, and debt payments and other liabilities, as I just showed you guys on that form. 3 years of personal tax returns. Now, if you have 2, we can look at 2, but 3 usually is used to close for personal and business, but we're focusing in right now on the buyer. It is best, though, if you have an existing business. That's what I recommend. I know for a lot of you who are trying to get financing for acquiring a business, you may not have one. You may come from self-employment, but I said in the beginning of this video, and rewind it if you need to, documentation may be down below, but if not, or you don't see it, experience matters, guys. If I run a marketing business, if I run a digital marketing agency, which I do, I run affiliate marketing businesses, that's going to look more attractive to them. They're going to want to look at everything that I've done. They're going to want to look at and see everything that I've done underneath this business and other businesses, how I've helped out other people as well and shadowed them. And they're going to want to know everything extensively because they're not taking a risk on just, hey, your annual gross revenue is $1 million. Yeah, but we're looking at profitability and cash flow of servicing the debt. That's the true equation of this. It isn't all annual gross revenue or month to month. We're not micro looking at these. We're looking at them on a macro level. So we have to make sure all that is included, global debt service coverage ratios. I'll get into that in a moment and so forth. But for, again, the buyer, 3 years of personal tax returns. They want to evaluate your own ability to repay, not just the business. Of course, this has to come back. What do you already have too? They want to know everything. They want to know what kind of income you're making. There's a verifiable income, loan application. And they also look at personal tax returns to verify that it is actually you. There's more to this too. Loan application will vary by lender. And I have the app down below and I'll show it to you how it's asked for that lender. Borrower information form. This is an additional document that the SBA does require, and I can share that with you if not now. There's a few other things like individual certifications and borrower certifications, and there could be a little bit more that is asked. Just keep that in mind. Pro forma financials, projections for the business you are acquiring. Business plan. This isn't always necessary, but it is a common request, especially for a lot of startups, and it would be asked for you. Usually when you're acquiring businesses, we want to know. And again, it's a lot more commonplace for a startup with less than 2 years, primarily less than 12 months. But depending on that lender, usually they'll ask for a business plan, projections, assumptions, and more. This isn't always necessary, but again, it's a common request. A resume, of course. We want to know what you have done, what you are currently doing. Who are those references? Who could we contact in the case of, hey, we have to verify, did you actually work for this business? Because I know a lot of people who just put things and I'm like, okay, well, we verified. But we won't always have to go to that extent. We just want to make sure all that is clear. What kind of experience do you have, et cetera? How much years, what skills do you have? P&L for your balance, profit and loss for the businesses. If you own other businesses, that will be connected to the new business plan, plan on submitting these. So if you already own another business, that will be something that can help. Balance sheets applies the same as the profit and losses as we mentioned here, just underneath that. Purchase agreement. These are terms of the deal. So that'll be asked for. For the seller, tax returns. They will be plan on submitting 3 years of tax returns if available. It's imperative too that we ask for around 3 years of personal tax returns, but we're looking at the tax returns on just as a global scale on them. Business, of course, because they are the seller. That's what we'll have to look for. The 4506T form commonly seen. This confirms that your return was filed and up to date. I won't go into 4506T forms on this and like idle and what's happened. If you know, you know, but I won't. This is a lot to cover for 4506T, and I don't want to do it in this video. But P&L have 3 years that should match up with the tax returns. If I'm looking at the two, what is on that form? That's on this one. What's on form 211120S when you have an LLC and I'm looking at net profit, or I'm looking at other lines and I'm looking at additions and add-ons, and that tells us the overall total cash flow and your profitable business. There's a lot more. So a balance sheet, 3 years that should match up with the tax returns. This is huge. This balance sheet is very, very important. Proof of ownership of the business. Of course, if you're looking to buy a business, we don't want to have it be purchased underneath somebody else's name already, and then you're trying to purchase it thinking it's the same owner, or there's another owner involved that you didn't even know about, that didn't even come up in the application. And there's so many things that people just try to undermine, and you wouldn't think so, but they don't sneak past me or my team, at least initially, or if they did, they wouldn't go through some of the processes in that time of underwriting. Business licenses, year-to-date profit and losses. I mentioned year-to-date balance sheet, but those are more year-to-date. So product service overview, and we're going to go into a few other services here in a moment, but you guys got to see primarily off of that. And I have another tab here. Let me open it up. I actually bookmarked this on one of my docs, so I want to make sure I open this. Give me one moment. I might give you guys a quick example. It's a lot of flipping back and forth with my documents that I put on a Google Doc, but I'm going to leave it on this screen, and I'm going to move things around in just a second. Let me scroll to my document where I have the examples that I put here together. And some of this is also confidential. I didn't move some of the numbers around for certain people, so I can't always show that. Some of the numbers have been changed to reflect the examples for this video and more. But what I put in this document that I'm looking at, and I'll move this over so you guys can see. Okay, that's better. So what I put into this document is just a few examples on how I'm evaluating myself and my team. And I'm just scrolling through my section where I put, if you're looking for loans above 7 years, when you look at getting somebody who's seller financing and they're willing to put their part, the 10-year amortization, it doesn't always equate. So you will see a lesser of a term, and the overall total cost of financing then becomes more expensive because they are seller financing. That's where there's a seller note, there's an agreement that they're willing to put in this much to help you purchase that business, to take it over, to put it underneath your name, and a few more things, and so forth. So here I'm going to go through my document very quickly. I'm just speaking about the down payments, more or less of what I spoke about. And it could require somewhere around 10%, normally 20 to 30%, depending on working capital inclusion and cash flow issues or projections. That is also something we have to adjust for. So here, let me make sure I get to the right spot. Okay, so I give an example here, but I'm not going to go into it too in depth. I just spoke about recently in this video about the 1,500,000 to 900,000 appraisal value. So we'll carry on to that, and I won't give you guys an exact number, on that. When you speak, this is what happens as an introvert for anybody. If I speak a little bit too much on a video, which I'm not used to speaking anyways, it's what happens. So here, we're going to assume you found a company that was listed for making, let's say, $600,000 a year. All right. And after the diligent work that we did and that the seller did as well, you're looking to purchase that business at a higher price. You're looking to purchase it at the 1,500,000 amount. There's just depending on a few things, appraisals, etc. But I myself and my team have to factor in working capital costs, the budgeting to the working capital, so you have enough money to not only service the debt, but to have enough cash flow into the business where you can recirculate it and not have any problems having to just financially stay up afloat. And there's many more reasons. So emergency funds, I have a lot of people come to me for that. So we're going to say that the total purchase price in this example of about 1,500,000 then comes up to, and it wouldn't be like 100,000 jump in a lot of cases, but you may see something where it's probably 20 to 50,000 to account for, more or less. So let's say you have now about 1,550,000. Let's just say that as a rough estimate, but it just depends on each file. And the seller has agreed to issue a 10% seller financing note, knowing that he won't receive that or she won't receive that amount until after the SBA portion is then repaid. Since this loan then falls under the change of an ownership, the buyer must inject then 10% yourself into the deal. But however, it could be more based on the judgment of our lender. And I just gave you guys a few rundowns on overall total projection costs, overall total value costs, the transaction costs, post-closing liquidity. And there's a few more things that factor into just saying, well, if we're factoring working capital and other factors into this equation that bumps up the amount for the total loan amount, it can be a bigger difference with certain clients and certain sellers. So just certain demands that the seller has more though than the buyer does. So we have to look to appease them. If not, they bring down the pricing on the business, the loan amount, and to help you out in a few things. So the equity injection can come from personal cash, cash that is borrowed, as long as that repayment is then made from a source other than the business, other assets or standby debt. One thing I want you guys to know about is when you're purchasing a business, and it goes for many reasons, a lot of the lenders want to see you have at least 2 months. A lot of them want 3 months, sometimes even 6 months of deposits into your business account or wherever that money is sitting that you're going to use as a down payment towards the overall total project cost, transaction costs, and more. But not necessarily is it because you don't have that, will they not consider you? They just want to see that you have money enough, because that also shows if you can keep enough money for a certain amount of months consistently into the account without taking it out, then they're going to know, hey, well, we can trust this person better, that they're going to have this amount of remaining money into their accounts, and it's not just fluff, and we're not just basing it off of theory. But a few more things, and I'll come back to that part. So if the buyer is willing to put 10%, 15% in this example to finance, then there might be an additional 1,100,000 left to be financed. So I'm not going to get into all the intricacies on this number. I'm just coming off the top of my head on some of these. I do have a few examples, but I want to run this on a different level. But there are different structures on how we can do this, and it could be a little bit more expensive, like I said, when it comes to seller financing on this equation. Just understand how much percentage of the total loan amount you would require to put down as a down payment and as a more costs to purchase it on a certain amount of gross revenue or a certain amount of volume that the business is generating per year. Sorry, I'm just trying to get some of these numbers in place. There's a little bit of everything. I don't want to confuse you guys right now, but I'll be able to communicate this with you even more. More importantly, though, than actually putting the money in is making sure you understand the return on that investment. So I'm going to go away from what I put there. That's a lot of another thing that I put together. Let's get back into this document. But what I mentioned in that is understanding the profitability, understanding how you can scale the business. It's not just about buying a business. It's about looking at how in the future, if you were able to exit out, although you may not want to, how do you prepare that business for a greater return on investment? How much cash flow will you have on hand? How much will it leave you per month if you're at a specific interest rate and you know that your payments, let's say, will be on a yearly level? Let's say you're paying $300,000 per year, which leaves you how much per month in cash flow available. So you have to look backwards on that part of the equation, and I help business owners with this. It's a very in-depth, it could be an Excel spreadsheet thing, but how much are you left with? So how much have you made on your return on your investment within the first, second, third year? These are things you got to look at, and seeing that if your company is growing by an additional 2%, 3%, 4%, how much threshold or how much money do you have available after you're increasing your growth of the company? What would that return look like in the next 4 to 5 or so years? And would you be happy with that? So what is all that activity return on investment? What is the financial return on the investment, and so forth? And I think I'm going to go into a few other things. Okay. So let me go into another service. Actually, let me continue with this one since we have a little bit more. But What would be required? The product service overview. Let's go over that very quickly. I know we're way over time, but I want to make sure you guys have this and you guys can replay it. Loan size, 200,000 to 5 million generally with these. Full documentation, underwriting, tax returns, PFS, personal financial statement, financial projections, if applicable, all SBA required forms. 675 plus preferred credit, lower credit considered through our marketplace. If that's the case, all SBA eligible industries are property types considered. There will be usually a lien on all business assets, the majority of them, just so you know that. No minimum time in business. Startups considered with strong collateral, experience, and personal sponsorship. I'll help you guys with that part. Preferred minimum global debt service coverage ratio, or GDSCR for short, of 1.15 to 1.25x. Projection-based revenue considered. So when we're looking at debt service coverage ratio, I don't want to get into I don't want to geek out on this. I do this all the time. But if you guys were to see my Excel spreadsheets on all this, I have for different businesses and assumption businesses where I go, what would be the debt service coverage ratio in 5 years from now? What could it be in 4 years? What is it now is what primarily we're looking at. And if it's below 1, that's because you don't have enough cash flow. It could be not profitable as well. But that would be hard because you would be financially a lot of trouble. A company could go down under, default, bankruptcy. There's foreclosures involved. There's a lot of things. So if you're above and at least a 1.15, you can manage that business. You can manage the cash flow. There's enough circulating to 1.25. Projection-based revenue is considered. Loan proceeds can be used for eligible businesses or business purposes, i.e., for example, purchase, refinance, construct real estate, working capital, debt consolidation, equipment, business acquisition, franchise, non-franchises, startups, etc. All SBA eligible business property types considered, including special purpose property and land. Done a lot of that. And I'm doing a lot of that right now, actually. High loan to value, LTV, financing possible with compensation factors, including up to 100% LTV, CRE, commercial real estate purchase financing for borrowers that meet certain eligibility requirements. Rates from Wall Street Journal, Prime, 7.75 right now. I mean, those are going to increase, so you might see this different by the time you're watching this. Plus 1.75 to 3%. Fully amortized loans from 10 to 25 years, with the inclusion of real estate past 10 years normally. When available, additional real estate collateral, primary or secondary residence, investment property, etc., may be required to pledge. Alternative financing options, we can require that through another specific source. Here are some of the qualifications and borrower eligibility. Public records, have no bankruptcies or foreclosures in the past 3 years, no outstanding collections, have no open taxes. And this also goes for the business side, guys. Like I see a lot of different things on personal. And then if you don't have the FICO SPSS score, and that's a little bit different. But for the seller and all these things, we got to contribute these factors. Have no open tax liens, no recent 30-plus day late payments. For your cash flow, you must have sufficient business and personal cash flow to service all debt payments. This is demonstrated by 2 years of tax returns and financials, interim financials, cash flow statements, all this, et cetera, et cetera. So this is periodically what you're doing. Here are the SBA's specific criteria. See what happens, guys. Like, I'm not slurring my words, but this is what happens when I go into this a little bit and it's common. Have no felonies. Have no delinquencies and or default on government loans. That's huge. Oh, let me move that back. Basic eligibility to meet. Time in business must be above 2 years. And we're looking at it from an acquisition, so this could be different, but looking at it from the seller's point of view. Must be above 2 years. Owners must be U.S. citizen or lawful permanent residents. Your business must be located in the U.S. Your business must be open to all non-discriminatory basis. Businesses is operating for profit, not nonprofit. Your business must be able to demonstrate repayment ability from earnings. Your business must not be involved in lending, investing in real estate, religion, politics, gambling, or sex-related industries. At least 51% of the property square footage must be occupied and used by the business, especially when we're looking at commercial real estate property. You're looking to acquire owner-occupied. Process flow. Step 1, there's a pre-qualification we'll go through, and I can share that with you. You will input your personal information along with loan info, such as the amount for a purchase or a refinance, depending on if it's real estate, commercial related, etc. Your business ownership info and property ownership info, depending on what type of loan you're getting. Step 2, financial section. I will need to collect from the seller 3 years of business tax returns. Seller, 3 years of personal tax returns from you. That's usually how it works. And if there's anything from the seller more we'll ask for. Interim P&L and balance sheets. Seller, business and management info. PFS attached, usually by yourself, etc. Property info, purchase a contract. Those are just separate. Those could be different for like different properties, as I just said seconds ago. But the PFS statement is very important that we have on that party. Business plan. Normally, businesses under 2 years need to put one together. If a non-startup later on, we might ask for 2-year detailed financial projections with assumptions. So if non-startup, you can hold off on the business plan, and at least for now, it just depends on the situation. And with any loan, I go into a little bit here and what the expectations are. I give you guys a template. Credit approval. An appraisal takes place. Environmental review, phase 1, depending on the type of loan. Step 4, closing. I'll need business documentation, a lease agreement, loan docs preparation. So there's a few things there depending on the loan. So you don't have to send me all of it now, or I may ask for you to send it. There's an example at a $200K minimum, amortized over 10 years with prime rates plus 2.75 at 10.5 right now, which is common what you'll see. And the monthly payment, again, we have to look at the down payment. We have to look at a few things on adjusting appraisals, and this goes more so for purchasing a business. But you can see a monthly payment there, an example of $2,698.70 or so. And this, again, is adjusted as we go through the application process, principal plus interest, but it can vary on many factors. The total interest that will be paid on this amount that you're getting, $123,844. Total financing cost is $323,844. Not set in stone. This is just an estimate of what you'll get. We have to go through the application. I'll show you it right there. Documentation, more or less what to gather here. What the seller buyer's portion will be asked for. Video reviews. I've done stuff like that. We'll go into an online bank term loan, but I'm going to go to the comments here in just 1 second, guys. Please hang in there with me. I want to revise something to make sure I didn't miss anything on the SBA 7A with my other document that I'm looking at right here. So let me add a few things that you need to consider when buying a business, especially with an SBA 7A or others. It comes with many risks. Understand the business you are acquiring. Understand the finances. That's what's most important. Understand how to read finances. If you don't have somebody else, a partner who can, if you're going in partnership, whatever you're trying to do, but invest in what you can afford to lose. That's huge. That should be the premise of this, is invest in something that you're willing to lose money on, but also something that you'll be able to rebound on. Say, hey, I got to take a temporary setback, but this won't happen past 6 months, 12 months, or however long it is. So understand the downturns. Have a B plan, a C plan, a D plan on this. So let me see if I missed anything else. I want to make sure I got everything. Yes, I covered that. I want to say preferred lenders are best. I already touched upon this. We can do a better in-house look, which also does reduce the amount of time to funding. The underwriting is much more streamlined, much more efficient, much more up-to-date, technology-based, and more. But standard lenders will just send your application through a regional SBA office, which can add a lot of time to the process, and then it's mundane in the process with underwriting. I've seen those, and I'm like, learned my lesson on that one. And so make sure you have the best lenders with that, and I'll go ahead and show you that. Just making sure that there's enough operational history of the business, the profitability of it, the ability to pay the loan back, enough experience, the collateral, the down payment, at least 10%, with the possibility of that lender then requiring more. And there's a seller financing part of the equation. Credit, I went into that a little bit. Depends on that lender, but a lot of the time 680, as I mentioned earlier. The thing is, when you have a company with, I'm not going to go into the EBITDA. I'm not going to start even talking about a lot of that. Earnings before interest, tax, depreciation, and amortization. I don't want to get into all that, determining on cash flow, what you have, and so forth. But companies with a higher EBITDA tend to have sell their business for higher multiples. And so when a seller is selling you their business and they have a higher EBITDA, that's why you're seeing them selling it for much higher, and what we do in an evaluation and how they appraise their business. But I don't want to get into too far ahead on this. I can speak with you on it. But yeah, I covered this part. Having free cash flow for certain years. The possible returns I spoke about. Having the right structure of your business. So purchasing a business loan, you must acquire 100% of the business. So what happens thereafter is a different story. But even if you're buying out existing partners, the change of ownership must reduce and result into 100% ownership. Otherwise, the SBA will not be able to approve of that. Pretty much covered a little bit of that. Let me see, I have a few bulletin points I want to make sure I didn't miss. Oh, key point here. I don't have to say this, but this goes into it a little bit more specific. As the seller cannot remain as an officer, director, a shareholder, or key employee of the business. Now, we do have things where there's a consulting agreement where we don't really do it for up to 12 months or less with that seller. And this is something if they want to like mentor you, then they'll come on board and if they're willing to do that. So yes, I covered all of this. The valuation we more or less spoke about, so I already covered that. Okay, so I'm going to go into the next product. I know I'm going to go to the comments first, though. I just wanted to make sure I covered everything in that document. Appreciate you. Thank you for tuning in and always watching. And for everybody else in here as well who's shown their consideration. It's not like you guys always have to comment, but I do enjoy, I do value that greatly. Yeah, I can help with that as well. I'm back and forth with my businesses. That one's already automated. I have a couple of them. And just so you guys know, I do affiliate marketing in the health related industry. I've done a lot of things with proteolytic enzymes, fibrin, and improving people's back pain in a regard because I had those issues at some point, but also in other verticals and horizontals. So I've helped out a lot of people with different supplements, with different health products. I'm sitting on some of them right now that I'm a testament of using them myself. I have a back seat cushion. I'm not going to say the name of the brand right now, but I have one underneath me as well. The right chair, ergonomic chairs. But these are things that I can help with, and I have other verticals. Good afternoon, Kamar. I think you're probably on Eastern Standard Time, aren't you? Yeah. Being a victim to fraud is very serious. I just thought of something now because I've tried to help people in this. Depends on what departments of fraud. Can we remove it as soon as possible? Is it removable in time? And what kind of disputes? Do you have to put in dispute letters? So this goes a little bit more extensive, and I can't just say that it'll happen right away or it will be something that I can help you get funded with right away, because having fraud, whether it was out of your control or not, that's a big issue, and we have to clear a few things up. So I have to look more extensively into things on that. You are most welcome, Gerardo. Thank you. Yeah, I'm trying to make sure you guys have the in-depth information as professional as I can put this together, and we're already over time. And so again, I'm going to get into the bank term loan products and a few other derivatives if the SBA loan doesn't work. So here, good question. So let me answer this. One quick question. The SBA 7A amount has increased in the past 3 years. Well, if we're talking SBA idle loan, well, up to 2 million, I mean, that's changed over time. That's different, but not so much the up to 5 million amount. What is different though is the approval. So you could be somebody trying to buy, or if you already own your business, trying to acquire another business, or you are trying to get financing for your existing business or businesses, the multiplier to that is you can only get up to 5 million in total. So we're not saying we're going to give you a 5 million loan and then you take another loan and then now you're getting another 5 million for that same business. So it's up to 5 million, and it's just different because when you're buying a business, a lot of these lenders don't want to approve past 2 to 3 million. They're not even wanting to get 2 to 3 million approvals because it's such a high risk. It has to be for other uses of funds. And so they're capping that. And so that's how they're looking at it. And it's associated with the risk of that industry. So without me knowing more about the cash flow of the business, until I know more cash flow, until I have the tax returns and more, I can determine like, okay, you want a $2 million business, that lender is going to get shaky. You don't have enough cash flow in this business. We're going to actually find you in financial hardships in about a year, or you already are. So it wouldn't make sense to do that. And if you're buying a business, you would have to focus on the seller, bringing down the costs if they're even wanting to do that. And you're going to have to end up paying them more over time with them. And if not, if through the banks and then the SBA guarantee part of that. So that's that part. Is there any other SBA loan? Excuse me. See what happens? My voice. I don't mean to do that. It's an hour, 4 minutes, guys. So is there any other SBA 7A or SBA loan that has changed? Not exactly. The rates do change more than anything. I've seen SBA 504 loans that can change from 10 million. Usually is what you see. Those can even go up to 22 million in some cases, depending on what you're financing. But the cost of those, they're even parallel with an SBA 7A, where they want to do up to 5 million in a majority of these, because of the market. Again, what's shifting in a lot of these is the approval amounts more than anything, and the rates are. So if you're doing commercial real estate, you could see the rates being less because it's amortized over a longer extended time, and those types of funds and how they're used for. So you could see 6%, 7%, 8% on some of those, even more or less. Prime rates plus in some cases, especially when you're doing SBA 7A loans to that point. But no, not necessarily microloans. Microloans already and how that's been going. But I would say it's changed. It's just the process, the guidelines have changed for some of them. So with SBA microloan, not necessarily. That's the answer to that. And it's per community basis. It's per lender on that and what they see best fit. But more, again, it's about being capped at a certain amount and then saying, hey, you can only get approved for this amount, or you need the funds for what do you need them for? And if they see that's worthy of approving for, they'll issue them out. And there's more to that process. Yeah. And I come from, I love science. I love chemistry is my favorite class. I'll speak about it in the present tense. And that was the classes that I was just helping out everybody in. I love math, the calculuses, the descriptive statistics, the inferential statistics, other data analysis types of math, inferential statistics. I said differentiation. I love just anything that I can use numbers in and say, and this is why I love putting this is why I like putting things on an Excel spreadsheet. Like if I look at a past year-to-date financial profit and loss, and I'm looking at my assumptions and projection value, you bet I'm going to probably put it on an Excel spreadsheet and say, well, if my gross revenue of last year was 500,000, this year my projection and my assumptions on if I get X amount of customers, and I don't want to bore you guys with that, but you know where I'm going. Yes, I can help with these, and I have my own course for it, just so you know. I created a course in a step-by-step way of figuring out, okay, if I'm going to run an ad, how do I run that? Do I do it SEO organic, picking out the right products, the niche, the demographics, psychographics, I'm not going to get too far in depth on that, though. I want to get moving on to the next. We're already an hour in, but yes, please do so. Okay, so I'm going to go back into this document. I know we spent a lot of time on this SBA 7A loan product, but that's the majority of where people go. Now, an alternative to this is the online bank term loan. And I don't think any of this should have been covered in less than an hour. Some of them are like, get to the point, covered in less than an hour. I'm already hearing their voices. Yeah, but those are the same people who don't ever get approved, or those are the same people who don't even take the time to read anything. So I'm not here to bash anybody again. I'm just saying, hey, do your due diligence. Review this video. Come back to it. If the documentation is there, it is. I'm not trying to be mean on anybody. That's the last thing I want to do. Online bank term loan option. And we'll close up. We're going to go through this quick. We're going to try to end this in the next 15 or so minutes, guys, so you guys can get going too. This is non-collateralized funding. Sometimes it could require collateral. It's extensive, but if it's a deal where it just won't make too much sense and we're going to have to expect some form of real estate or anything that you have, then maybe at that point we'll ask for, but it's normally non-collateralized. It takes longer to receive your funds. It could be difficult to approve through underwriting and or the loan size. It's not so high, so I wouldn't start here. So if you're looking to acquire a business of about past 350,000, then I would start with the SBA 7A or another option I'll show you guys in a moment. But it's not as necessarily hard to go through an underwriting unless you are dealing with bad credit or it's not good enough, financials and all of this. It may take longer. If you qualify for traditional banking, or perhaps you don't and you're looking for an online bank term loan lender, then you can qualify with an online banking one, which is small, similar to a physical location, just digital more so, but it often requires more flexibility or gives you that and less requirements. So this could be a good option for you. Here are some of the details. The benefits of a bank term loan. They offer you between 30K to 350K in loan funding amounts. Now it depends. It can be up to 200,000. It could be up to 150,000. Depends on the loan proceeds. Depends on your business's structure, and the credit also determines getting you a better approval amount. This is credit heavy. This is revenue, or you could say cash flow heavy, and not necessarily is going to be collateral heavy, but that's what they'll look for. So in loan funding, your choice of 2 to 3 or 5 year repayment terms, which is cool. It extends the term. It's not necessarily a 10-year or 7-year with a seller note, or maybe less with the seller coming in. But you see 2 to 3, 5-year terms. And even with the seller, you sometimes even see 10 years with an SBA loan there. But you get monthly repayments. That's the other advantage. There are no prepayment penalties. You get fast loan funding, typically within 2 weeks. So it does take a little bit of time, but faster than SBA loans mostly. Fixed annual interest rates starting at 6.99%. Although in this market, prime rates are 7.55% or 7.75, excuse me. So you see between normally 7 to 15% approvals. I've seen a lot of clients coming to, and that's with those that normally have like 680 credit and above, 700 best. They get closer to the lower teens, not less than that. Leniency on use of proceeds options. When for this, just so you know, 7 or 6.99% if we're rounding down, then that between 25% or up to 29.99% in some of these cases. Term loans can support construction, remodeling, and more. Bank term loan general eligibility, have a minimum of 2 years in business, be a U.S.-based business owner by a citizen or lawful permanent resident, FICO of 660 or higher. We see the best for 680 and above. 660 we could work with, but as long as things look well. Have no outstanding tax liens. And if you guys don't have the credit profile, I'll leave credit repair information down below and more. Have no outstanding tax liens. Your minimum annual revenue requirement is of $250,000. Your business must not have bankruptcies or foreclosures in the last 3 years. No recent charge-offs or settlements. Your business must have appropriate cash flow to support loan payments, similar to what we saw before. Here's what the funds can be used for: general working capital, purchasing inventory, hiring employees, refinancing, business debt, marketing, construction or remodeling, business acquisition, a partner buyout. So somewhat similar to what we can see on an SBA 7A loan in terms of the buyer and seller documentation. So with what you saw above here, that's what we'll want. And it is in your best interest to always have a business, just so you know, and you're looking to acquire one. That's where I see a higher amount of an approval and having relevant experience. So there are several common ineligible use of proceeds for this program, and they are startup financing, house flipping, or real estate development, refinancing your personal debt. It's not business debt, floor plan financing. I had somebody ask me that yesterday on, I believe it was a TikTok video, and I gave them information on that and how hard it is to get financing for. Industries that are eligible, from a hair salon to an online retailer to an accounting firm. There are many small businesses that are typically eligible for a bank term loan. While most industries are eligible, there are a few exceptions, like those of being bail bonds, mining, cannabis industry, real estate development, gambling, ground up construction, contractors. That's a huge one, especially certain SBA 7A loan lenders. If you have a business, they won't do a certain ground up build out construction, an office space, certain ones for certain amounts. Used car dealerships, wildcatting, pawn shops, smoke shops, or vape shops. So cannabis, vape shops, more or less, you can kind of see somewhat of a correlation there. General eligibility, 2 years in business with corresponding tax returns, for-profit business, proceeds, working capital, debt refinance, equipment purchases, also though we saw business acquisition and so forth. Minimal annual revenue, you see that being the same. Individuals owning 20% or more of the business must be U.S. citizens or legal permanent residents. Credit for all individuals owning 20% or more of the business. I'm not going to go into this. I'm going to go speed through it. I'm going to try to leave this document, or if you fill out the questionnaire, if you have, you've likely seen this. So there you see that. Quickly, you guys can take it at a glance. Cash flow analysis is what we do. 2 years of business and personal tax returns, year-to-date profit and loss and balance sheet, business debt schedule, 6 most recent business bank statements so we can see liquidity, we can see other things. Barriers to fund. There are some items here to watch out for, and I'm going to quickly look at that, let you guys look at it. Global debt service coverage ratio, business debt service coverage ratio, DSCR, if we're looking at it on the business end or the personal side. But 1.15, we're seeing that a common theme with the SBA 7A is what they would require. Sometimes I've seen it go lower for lower amounts, but you see 1.15 there. Determined by business income and debt, along with personal income / debt. Both are required to determine if the business can independently service the business debt and individual can service all of their total debt. We conduct a soft credit pull that will not affect your credit score, so you don't have to worry about that. However, in processing your loan application, the lenders with whom we work with and who I will associate you with underneath this will request your full credit report from one or more of the consumer reporting agencies, which is considered a hard credit pull and happens after your application is in the funding process and matched with the lender who is likely to fund your loan. And I'll make sure I get you the right one. Underwriting guidelines based on debt coverage service analysis. Loan proceeds, we see that there. I'm going to quickly just show you guys this, what it's dependent on, interest rates dependent on. Okay, so let's go to the next one, and then we're going to close up very quickly. We're going over time. But personal / business startup loan. And this is one where you can use the personal side of the equation on your business. So this is when I also help a lot. I've helped out all the ones we're seeing so far. I've helped out majority of people get going through right now with a lot of them, and then ones that will be coming in, if not now, months later, that they said they'd come back. And so what's happening with the personal slash business slash startup loan, or we call it personal slash startup loan. Silence the call. It's on your personal side. So of course, it's going to show up as reporting timely payments. So just make sure that if you are tackling it with your credit and it's credit-based financing, I'll show you guys the credit requirements, but that you will be responsible and accountable for taking on that debt and making the payments on. If you have to take less to start with, and it's probably just a down payment you want, or we can do a combination of things. We can try to do a bank term loan with the personal loan. Maybe the personal loan, you get a down payment to use towards getting a bank term loan, or the personal loan is then used to use as a down payment for the SBA 7A or a few of these other ones. But sometimes you may be over leveraged and your debt to income is so high, you may not get any, or you will get very little. And we can also combine personal funding with the term loan with a line of credit. Line of credit is being able to use that for a down payment, and being able to use it towards the overall purchase of that business, whether that includes the down payment and other costs involved. So we can get very creative, but I want to go back into this and we'll close up here soon. So you can use this. I help out a lot of people. It's not uncommon that people use it as a down payment, use it as a purchasing a business, or they're using it for other extents. Maybe they have another partner who's putting in money into a business and they're giving it to them. They have money stored into another account. They just needed more money. But this one here, usually it's get a cosigner. I want to make this. So what you want to do if your credit isn't where it needs to be, usually it's a 680 and above. If not, 700 is usually what we shoot for. Then get somebody who can apply with their own credit, their own individual, and take on the debt underneath theirs if they can trust you to help you get approved, or for them to get approved, they take the payment and then you're on, even if you're a joint user on the account, but no authorized card users on that. This is different. So best option, and that's different if you're doing an authorized user underneath credit cards. I mean, if you're using credit cards, great, but this, what we're looking at is an individual applicant. Best option for stretching out your terms and for lower rates, and helps if depositing frequency is not every day or every other day, like a restaurant or retail business does, as they deposit more consistently than others. This will help you with the 680, if not 700 above. FICO Experian is best, or you can get a credit partner. In other words, not in this part of guarantor, but somebody else who can apply with their own individual credit. You file joint tax returns, co-signer, usually a spouse. So best option for personal slash business funding. I said here, please skip until you have the right credit. This may look different for you, so it may look like that depending on your file. A great option behind the unsecured revenue-based funding, and even as a combination and or as a substitute for the SBA 7A funding, and can even be used as a down payment for anything, real estate included. I'm getting a lot of people who get this for real estate, a lot right now. And I mean, when I say that, capital A, LOT. And I like the lot you purchase, like a residential lot. And can be used as a down payment for anything. Real estate investments too is a personal startup loan. And this real estate part of it, it's passive investments, it's residential investments. You can't get the property value or the property costs, loan to value, ARV, all these things fall underneath your budget or fall underneath what the lender would want on actually a property or a refinance situation, and they're not willing to accept that. And this is another situation where this will be offered. So 50K plus in annual revenue, maybe towards land and more things too. 0 time in business. Sometimes we see 35K there though. 50K though, usually. 0 time in business, but requires at least 5 trade lines. Have meat and potatoes, guys, to your credit. If you don't have at least 5 trade lines, can you buy a trade line? Yeah. Is it right to do it all the time? No. Will it look authentic? That's the lender, and usually the lenders don't approve of those. But if you're getting your trade line, there are ways of getting trade lines and getting them quicker. I'll try to help you guys with. But grow those trade lines out. Grow more accounts. Mortgages, car loans, installment loans, revolving loans. What do you have? 20,000 to 500,000 approval amounts. So it's quite high. So it might not be that million you're looking for what the seller wants or what it's all appraised for and overall total costs, projects, seller finance. And that may help you if you're doing a seller finance. But if you're like, if I can get approved between just 50 to 150,000, if I get 150,000, I'm golden. But 700 plus experience score, 680 we can consider as long as things look clean. Usually it's just the high balances between 600 and 700. And there's usually a little bit things on strong credit history, but usually that's a lot of the reason. 6%, 18% cost of capital. Oh, by the way, we can use maybe a pay down loan to help you here if you have high balances to pay off those cards and more. 6% to 18% cost of capital. In other words, interest rates, you even see up to 25%. Of course, it'll be more based on credit and more. 24 hours, 1 to 2 weeks to fund. Sometimes I've even seen 3 weeks, 3 to 5 weeks, but 1 to 2 weeks a lot of the times here, depending on how much, depending on the file. Time to approve and fund. Soft pull initially and for pre-approval. To get hard offers, it's a hard pull, which is standard. You can then decide if you want to move forward. Once the initial contracts are signed and all documents are collected, it's a hard pull to get you soft offers and then develop that into a hard offer, which then you can decide if you want to move forward. So I do this all the time, guys. I actually have to speak to my lenders today on this. They're going to send me an email, not on a phone call. But no, the origination fee, 15%. Yeah, you're saying it's high. Okay, listen to this. I know it sounds that way, but that's how the lenders, they compensate themselves by offering you a low interest, 6 to 18%. Keep that in mind, not these 30, 40% factor rates or interest rates factor rates of 1.1 to 1.55. I don't normally speak this fast, guys, but I want to get done with this. I speak very slow. If you guys know, you know. With monthly payments and terms for 1 to 5 years. The amount that needs to be fulfilled and effort it takes on your behalf, or on our behalf, we should say here, your behalf submitting things, yeah, but on our behalf, on all the things we have to do on the back end, is something you need to consider. And the rates you are usually getting are better compared to alternative options like MCA loans, hybrid cash advances, if you're not purchasing a business, but you're looking at it from a different perspective. Plus, you get a better term to start with that makes up for all this. We may be able to lower it down to 12% or so, but not always. Each file is different. And the fee is not ridiculous when it's unsecured, non-collateralized, no collateral. Max funding. You can maybe walk into a bank and maybe get something around 10K or so, where we can help you get 100K, 50 to 100K more or less with our resources and expertise, which is also why we charge a 15% success fee. So again, that's just a disclosure. It's just based on per file basis. I'm not saying you're going to exactly get that. It's just better when you go to an expert. And you have to keep in mind the benefit exceeding the repayment and how you use these funds potentially to double, triple, quadruple your revenue, and or perhaps save more and keep more in your business afloat. For mortgages, you have other payments, you got to make rent, etc. Important details. I'm not going to go through all of it, but we want to speed up here. Have less than 35% utilization, minimal recent inquiries. You see strong credit history, no recent negative item, just things you would expect on your credit in an additional amount. I may leave this document down below. Some things on other types of services and so forth. What we would need, pre-approval, post-pre-approval, and I'll communicate these with you. You see here, and it's per case basis on what you have and don't have. But here, example, we want to verify your income. Let's say we go through the pre-approval. I get feedback from my underwriter, and they go, hey, Michael, they have a green light. Ask them if they have verifiable income of at least 90K. We can get them somewhere between 40K to 120K via a combination of installment loans / term loans, otherwise known as line of credit, personal side, or credit cards, personal and or business. We can do those as well, even get you 0%. But this is different for each individual based on their debt to income and more. So I can't say exactly what it'll be until I know, but I've seen these examples come through so I can more or less guide you in that direction. Application, startup loan videos, personal funding, option number 2. I may have other options on that, but I'll say, hey, this isn't best. I'll say something like, please skip, not best, it won't work, or this is not the best one. Go to the first option above. And I say that very sincerely. Don't just apply to anybody and everybody, or don't apply to 3 different places, guys. Don't do that. It doesn't help me. I have my lenders reaching out to me, asking me why are they not submitting more. I'm like, well, they're not interested. And I'm like, well, they submitted it there. I didn't see that. Well, I didn't take a look at it. And it's like, we're going over here. You're going over there. Don't do that. Unless I'm somebody who says, okay, let's do that. I'm going to help you guys so you guys aren't racking up inquiries and doing all this stuff. Credit line hybrid program option. Please skip this until you have 700 plus credit on all 3 consumer credit bureaus. Less than 700 make work only due to high balances on revolving accounts. Then you may, quote unquote, still qualify. Get a credit partner, or in other words, a guarantor who owns at least 10% of the business to help you where they can go be the applicants. How would you like to get up to 150,000? I just kind of go into the details. Be able to liquidate the cash out of these cards and use them for any investment you choose. So it's 0% interest business credit cards, introductory rates. So it's really good. It's free money basically, and you can use it as a down payment, use it even as a purchase of a business, towards a purchase of a business, and many other reasons, not just for purchasing the business and much more. So I won't go through all the specifics. I'll leave this down below. But no doc, true no doc financing, No upfront application fees. I'll be very transparent. I'll show you this. 700 plus credit on all 3 consumer credit bureaus, qualifications. I won't go through that, but you can see the rundown. Under 40% utilization, minimum of 2 open revolving accounts, et cetera, how it works. I'll have that there. Business line of credit, we can combine that. I'm not going to go through all this, but you can see that. I may have more options for you, may not, but you see that. And then there's a revenue base. We're going to end up right here. So I have a few things here where business owners try to get a business loan or an advance towards the purchase of a business. So there's been questions that have been asked of me where if a business or a business owner is trying to, or let's just say it this way. I was thinking on the seller financing because I'm on the SBA 7A thinking. But this is revenue based on month-to-month bank statements. So it'll be different. We could look at tax returns, especially if it's purchasing a business. But for the amount of funding that you're getting, that's what we have to look for. So can you get funding on the business that's being sold? Yes, that's the obvious answer. And there are a few things. So if you have an owner who's retiring and he's selling, let's say, everything, like this is the whole kitchen sink, the whole bathroom, everything. The entire business, it could be whatever it is. It could be hotel and restaurants, if that's how the business is. For what amount? 500,000. And then that business, you can tell me that business has been established for many, many years. How long? I'm going to need to know more. I'll ask you more questions. But this is a new venture for the new hopeful owner, like completely new business. We're not going into their background saying they've had previous experience. Maybe this is a whole new vertical for them, excuse me. So can the new soon-to-be owners obtain funding through revenue-based financing to help buy it? So here's my answer to that. It can be done. However, the original owner's name would still be on the loan/advance until it is paid in full. It's just kind of like if you ask a business or a business got an advance. Let's say you have a business and you got an advance or a term loan on it and later decided to sell. So if a business, let's just put it in that hypothetical space, if a business got an advance and later decided to sell, they could sell it, of course, but they would have this loan advance currently. So the new owners would have to understand that a daily payment, it could be weekly, depending on the position in most cases, is being taken out of the bank account each day/week, and they can't stop it or else the business will default. That's not good because of past default judgments in place and a lot more issues. But the buyer may be okay knowing they are buying a business with certain debts attached. Many do. So it's best to have an existing business when you're applying for a revenue-based and you're looking to acquire another business in another way. But I don't want to go too deep into that segment. Not a lot of people go through this to even buy a business. So here it is. I go through the details of it. Let me see if I have this open. We'll close up here in a second. So all of it is down here. I'm not going to go through all these specific details because it's not the product that most people go through, but it's like the last resort in some cases, and it's still hard to get the funds for what you need. So here's that option. Equipment financing, I have a few things that are a little bit unrelated. Asset-backed. So if you have asset-related collateral or anything similar, we can use that. That could be something you use as a down payment. You liquidate something out of. Maybe you're looking for an AR line of credit that then will later be applied towards the use of a new purchase of a business. I mean, there's asset-backed funding here. I won't go through all of them. Cash out refinance. You have grant opportunities that are still hard to get, even in this market. SBA microloans, the Community Advantage Program, it's a lot harder too as well. Angel investors, equity crowdfunding, different options, venture capitalists, and even just regular crowdfunding there. Venture capitalists, other VC and angel investors. Here are margin accounts, financial guarantee bonds, fixing, improving your credit repair. I won't talk too much about that. You'll learn more about it there. Bonus, building your business credit, vendor credit, and revolving credit. Business credit cards. I show you guys some videos of what I made and some extra resources. Home equity line of credit, home equity loan. You may need to use one, and that's like last resort. That with 401k IRA financing stocks. But there you see some of those options. 401k IRA, as I said that, and stocks and more. SBA idle loan latest updates, employee retention credit. Make sure you guys don't miss out on that if you have current W-2 employees. And I just go into a conclusion. Okay, so I believe I've covered everything. Let me make sure that I have, looking through some of these other tabs. Okay, I covered that, the forms, that other document with an example. That is done. Now let me come back to here and we'll close up. Let me move this document over. Okay, so if you haven't filled out this form yet, I'll leave it down below in the description. And if you have, Appreciate you. And if I haven't gone back to you, I will here soon. I do get flooded, so please be patient. You can even nudge me. Hey, Michael, did you get that questionnaire started? Hey, Michael, I just wanted to make sure you were doing well and that questionnaire is getting completed. Yeah, I got you. And then that even shows me better, because if you're nudging me, you're being responsive. I might already have you on my list, but I'm going to say, dang, that person is really going out of their way. They really need this. So I'm going to go ahead and probably move somebody to the top even higher, because it demonstrates you're just not filling out a form just to fill it out. So you can select from one of the two options. I may change this page that looks different in time. Let's look at that really quickly. Get the funding your business needs fast. Complete the questionnaire form to get a personalized and customized email response for your best funding option and options from a real business loan broker expert. If what I didn't say today isn't enough, I could do other things. I could dance like a monkey. I'm not going to for you. But the thing is, what you were able to see today is what I don't want to use the words what I'm able to necessarily do, but I want to say that I can demonstrate for at least this video on what you guys can get started with. And yeah, it's what I can demonstrate I can do. And I've helped out a lot of businesses. I was leaning more towards the whole, you guys are seeing this on screen, but until you guys go through the app with me, that'll really demonstrate what I'm able to do, and you'll be able to see it for yourself. That's what I meant by that. So here, please be serious and responsive. Do not be that person wasting my energy and time. Plus, get a free 6-step pre-approval lending checklist to get you approved for funding much faster without making mistakes. Fill that out. You go to the thank you page. It'll likely walk you through a video of my processes. Please watch it. Don't be that person coming to me later. Oh, why do you do it this way? Oh, so show me and watch the video. Okay, cool. So about us, and there's more information there. Our services, the key benefits, how it works. And there might be a video. This may look different over time. I may expand, but that'll be down below in the description. Okay. I want to go one last time into the comments to make sure I didn't miss anything. And if anybody has anything, I'll leave it open for about another minute. Does anybody have anything? So while you're doing that or thinking of something, we talked about it all today. And if there's anything new that comes up, you'll be aware of it. I might leave that document. I'll put it in the questionnaire for you. It'll look like that, somewhat of a similar format, but it'll be more customized and personalized based on the answers, based on things that you have. So it's different for each person and how I line things up. But if anything changes, I'll make sure to let you guys know. And I can cover more in some of those questionnaires too, maybe some more examples, more things that come up as this industry does change in times, market changes, fluctuations, different requirements from the seller. There's a whole another topic. I just gave you guys a good brief overview of seller financing, but not too much in depth. And some of the other alternatives, you guys have the bank term loans. We can combine that with personal loans, or we can combine that with lines of credit, and or you can do the credit line hybrid and liquidate the cash out of these business credit cards. And I know for a lot of you are not in a position to do this, but my question to you is, what are you doing to change? What do you expect of yourself? That's my question to you. I ask that of myself still every single day. What do I expect of myself today? What will I be changing today, if anything? And so you have to make micro evolutionary changes and macro. So those micro changes are what turn into the macro. Stop looking at the outcome macro and start looking at a micro image, and start saying, what can I do now to prepare also for tomorrow? What can I do now that I don't have to leave for tomorrow, next week, next month? So I will work on my routine. I will work on my habits that I don't see a big change, but every little thing you do does amount into more over time. And so at the end of this, what you're developing is your character, your personality traits, and you're building these blocks that when you get into business or you buy a business or whatever the purpose is, that it's a self-reflection. Your character and your reputation, they match, if not higher enough. And you're like, well, I'm not getting stressed out. Or if I'm stressed out, this is what I do. This is what I jump back into my character. I go on a walk. I read a book. I do what it is I need to do. I'll meditate maybe. If I'm not in the right mind, it's hard to meditate. And I've had a long day. It's harder to get my thoughts together orderly or cerebrally. But these are components that'll help you, and it'll help myself too in the application process. So it's more than just getting funding. Okay, nobody has any questions. I hope I didn't miss anybody. Let me make sure. Gerardo, I answered. There we go. There we go. Got it for each and every one of you. And again, this is spontaneous, so it's not like I expected everybody to be here. I was going to broadcast it. I just wanted to jump on this, though. So you guys got to see everything. For all other needs of funding, for all other purposes, I'll try to leave information down below as well as in that questionnaire. I like how you said that. You should put it in caps locks to emphasize that. And you probably see me say that and do that. You become your habit. And I want to say something to add on. You become your atomic, elemental, granular habits. Nobody ever thinks about it like from a nucleus, from an electron, from a proton, from all of these orbitals. You guys got to look at it from the nucleus. How deep are you willing to go? You can't just look at it from the outer ring. You guys got to look at it from the central ring. You got to see how many electrons. Those electrons are your, let's say, your network. Those are also your characteristics. So the deeper you get into, depending on that element, depending on that compound, of course, it's different. I don't want to get too far ahead. Geeking out now. I can go hard on this. But thermochemistry, man, I love that class too. That's my favorite. Or thermodynamics, I should say. Thermochemistry, thermodynamics. Yeah. But yes, exactly. You become your habit and everything starts to align. The stars align and linearly, literally, everything's not linear in life, but you'll see this. You'll see a lot of this. Supply and demand curves. My goodness. You'll see then like here, and then you'll zig, and then you'll zag, and then you'll go up for some time. I still do that. Zig and then zag. But it's what you do in those zigs. Do you just zig and then just zig the other way, or do you zag upwards? How do you do that? Or do you go down, but then what do? You stay there for a little bit, and then you boom, you pick back right up. Those are the things you got to look for. Exactly, it does. It has more room to, but here's the thing, and here's an example, Gerardo. Oh, this is a big pet peeve of mine. For those of you in here watching, let this be a lesson. Don't submit my form if you're not serious. I don't have to say that. I'm not like any other broker, long video. I'm not. I do things very energy and time efficient. If that's not what you like, then it's not what you like. I'm not always going to conform because you want a phone call. That's not how this works. Is it right to give you a phone call at that point? Is it not? See, I think these things through. I don't know if you do or if that's how you are. But again, that's how punctual and disciplined I am. So just be very careful about who you turn to, of course, in the space, and know that you are in the best of hands. That's what I want to mention there. But yes, we have more ways of processing. We have more ways of thinking our thoughts, observing our thoughts, and it goes way beyond just the business, guys. This is going to be for your life. This isn't just, hey, I want a business loan, Mike, or, oh, I was going to say this. Sorry, I went off sidetrack. But I normally don't do that. If I go on a tangent, I do it for very little, something that's important. But I had a business owner, and I've had multiple of these, who just submit my form, and I'm like, okay. I sent them their questionnaire response like I've sent to you and many others. Okay, that's my next step. And then I follow up with them with the text message. Okay. But I wanted to call them about something that it was urgent, that I had to know about it, excuse me. Okay. 4 or 5 or so rings into voicemail. Hi, this is da-da-da-da-da. I'll leave you a text message or something similar. And other people do this too, or they don't do it. Okay. So they have a text message from me. Oh, okay. Thank you. You left me on red. And then I followed up with an email some days after. Okay, give them the space they needed. And then I sent them another text message. Okay, again, okay. Now, I called them once more. I didn't have to. I didn't want to get into that position. I don't want to get in that position. Oh, I hate that. I hate it. I hate having to do that. Putting me in, that's not in a growth mode. That's in an uncomfortable growth mode. That's like going beyond my own beliefs, my own values at that point. But these people, I'm telling you, they're very like subjective, and they're very like, why do you fill out the form? And that shows me you're not accountable and responsible. Why do it in the first place? Why? Don't do that. And I know the reasons. I know the psychology, guys, but I'm not like every other broker out there and so forth. But it's just demeaning. It's just irresponsible. It's unaccountable. I'm like, okay, you said, and they said it in their voicemail, one of them specifically, hey, I'll reach back out to you. Just leave me a text message. And okay. Pero ¿a dónde? ¿A dónde estás? Where are you? And then 4 months later, hey, Michael, I just decided to get a loan. Get that crap out of here. How about you ask how I'm doing first? Hey, Michael, how are you? Hey, I need help with this. Okay. Now, if I'm willing to help you at that point, usually I will. But if it's too of an extreme where I'm like, Where were you when I needed you? Where were you when you needed you? That's ultimately what it is. It's you needed you more than you needed me. So if you don't know how to need you, that's where you got to begin. So I deal with different characters in getting people funding, and you don't have to be strategically as much as I am, or the standards, do they have to be the highest? But I'm just saying, let's leave that out the door. If I decide to work with you, let's leave that out the door. Or if you're just the right person, you're this entrepreneur, you're like this high spirit, happy, even when you're not as happy, you know who you really are, and you don't let that affect you or someone else, and you rebound, you don't let days go on with this, and you go, hi, Michael, yes, I have heard of you, I've seen your content, and I don't want to waste energy and time, and I just want to ask you a few okay, all right. And then I'll ask questions of you so that I can ask on the personal side, perhaps, not always, but depending. Business side, okay, simple. 3 minutes in, boom, thank you, straight to the point. If I needed to, done, answered. But some people are like, well, I just got to call customer service, or let's talk next week, let's talk 2 weeks from now. And I'm like, what? I'm not a salesperson. I'm not a natural salesperson, guys. I come from an academic background. I know sales, I know marketing now, but I'm not going to sell you. That's not what I'm here to do. And I don't want to have that behavior. I don't want to transmit that over to you guys. Not that I'm saying I'm better than a salesman. I'm not saying I'm better than these people who are naturally just trying to sell you, and that's how it comes off. But I'm saying I come from a more, I don't want to use the word ethical. I'm not saying they're not, but their practices, their tactics, they don't get to me, because I know now more or less how, what, why they say it. I catch those things. I catch what isn't being said. I listen to more what isn't being said than what is said. Okay, guys. If you did get value, please give it a thumbs up. Share it with others who you feel will find value out of it. It can be a complete stranger, a friend, or a family member. But you know, at the end of the day, you were able to help them out. And if you haven't subscribed, please go ahead and do so. And click on that bell notification icon so you do not miss any future content I will be coming out with. My guy, thank you, Gerardo. Thank you, Mamacita. Thank you, everybody in here, for watching. Tamar and everybody else that I may have missed. And those of you who didn't comment, it's okay. I'm not looking down upon anybody. I'm an introvert. I usually just pop into rooms and I don't always comment. But I'm very, 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 very keen to observe. That's what you guys need to do more of. And observe your thoughts. Right, Gerardo? Hashtag. And observe yourself, because if you're not doing these things, it could be affecting yourself. It could be affecting someone else at the same time. And I'm not having any of that. Just so you guys know. It could happen. Okay, happened. But let's not let this happen again. And so please, guys, personal development, it's huge as a business owner, as an entrepreneur, etc. Work on those things. It's hard to, because you're doing a lot of things, but it'll make a significant difference, not only in your business, but in your own personal life. That's all for now. Thank you all. Take care. Talk to you all on the next one. Bye.